In the summer of 2021, the Chinese government banned the mining of Bitcoin. At that time, China was the world's largest miner of Bitcoin, but that production soon dropped to zero. This and threats of additional government regulation drove Bitcoin to lose over 50% of its value in that time frame. However, recent data suggests that Chinese production didn't stay at zero very long. By fall of that same year, according to the Cambridge Center for Alternative Finance, several underground Bitcoin miners reemerged in China and restored them as a major contributor in the Bitcoin world. Some Bitcoin analysts have viewed this willingness to accept potential penalties from the government as proof that the belief in Bitcoin is strong and persistent. More recently, Bitcoin has been performing poorly due to several factors. One, the continued strength in the US dollar. Two, rising domestic interest rates. And three, some trouble in so-called stable coins that have dropped Bitcoin below support at 30,000 in recent days. Now, if a trader believes that the fundamental support of Bitcoin remains strong and that Bitcoin will soon recover from recent weakness, they could express that by buying the May micro Bitcoin futures contract at 29,500 and target a return to the April congestion area at 40,000. A stop for this trade could be set at new lows of 24,500. This trade would make $1,050 if your target is reached and risks $500 if you're stopped out of your level. Now, if a trader believes that Bitcoin's recent weakness will continue, they could express that by selling that same May micro Bitcoin futures contract at 29,500 and target the late 2020 congestion of 20,000. A stop for this trade could be placed at 35,000 above. This trade would make $950 if your target is reached and risks $550 if you're stopped out of your level.